All right, welcome back for another episode of Carnivore Trades. Today is Monday, September 12th, 2022. If you're not done so already, give the video a thumbs up, like, comment, subscribe to the channel. Come find me on carnivoretrades.com for swing trading alerts and analysis. By the way, that is 23 winners in a row today. We took 3 more this morning. 1, 2, 3, actually all of them pre-market. We had a play on silver, platinum, and oil, all taking profits there, partial profits on those. If you want to get in on that, come find me there on carnivoretrades.com. We're having an absolutely killer year. This volatility is awesome for swing trading. Anyways, here, let's get into the markets. So we got up to that 410 handle as promised. We talked about that really Friday, and I mentioned it on Saturday in the weekend video as well. So high of the day, 411.73. I said, 410, 412, somewhere in that area we'd probably get up to. And that just coincides with this pivot low here. So 411.39, you can even just take an hourly here if you want to. You want to get, technical with it. You can see there's your little pivot low. And we went right in there, and now we're stalling. And you actually have a pretty decent bullish inside bar here on the hourly that we're kind of building up here. Markets have kind of gone to sleep, though, over the last pretty much all day. So we had the gap up, little rally, and then just kind of gone to sleep here. My guess is that we probably gap up on CPI tomorrow. I'm just guessing based on the way we're positioned right now. Again, I have no idea what the number is going to be, but the positioning of the market here says we probably could gap up. I could be completely wrong. I am still expecting further downside. So when I say gap up, I'm not telling everybody to buy the market here. I'm expecting further downside, but the positioning does, we had a nice little pop here. Wouldn't surprise me if we had kind of a gap up into maybe that 450. You got this upsloping trend line here, this previous trend line. You could gap up into that. There's some resistance levels above 415, 416, somewhere in there. And it is OPEX week. So we had a nice run, and you kind of get those, maybe you get those bulls who kind of, missed this move here and were too scared to buy this dip. They'll buy the gap up, and then they get faded. It is OPEX week, so usually the first 2 days, if the first 2 days are up substantially, a lot of the time you kind of get a fade around Wednesday, and then vice versa. If you're down big Monday, Tuesday during OPEX week, you kind of get that reversal around Wednesday or so, and then they take it back up. I'm just theorizing here. Again, you do have that 20 moving average. For all I know, it's going to hold, but it'll all be on the CPI number tomorrow. When I see the market's reaction to it, I'll have a much better idea of what we're looking at moving forward. I will say a couple of things, though, about today's move. The last 4 days is very, very reminiscent of August, and specifically right here. So if you remember back here, I was saying, guys, this is just a bear rally. That's all it is. And there's many reasons for that. Several of them are synonymous with what we have today. Apple is doing all of the legwork, and I mean all of it. So, I mean, you're up over 4% on Apple, $3 trillion company up 4% in a day. That's, not normal. And they were doing this all throughout August, specifically right towards the end there. You do have some, Tesla is up decently, up almost 1.5. Tesla's doing okay. Amazon is up decently as well, but you have Meta in the red. Nvidia just turned green here, but that was red all day long. Microsoft, had a nice move up, but kind of faded off the highs there. Let's take a look at Google. I haven't looked at Google. Google's actually negative here today. And if we just look at a few sectors here, like XLV, you got a doji. You're way off the highs here. XLF, also much, very much off the highs. XLE, MATS here, XLB. Nothing's really surging here after the open, right? That's my point. It's really all just Apple. And that was a major characteristic of this. Another major characteristic was very, very light volume, right? So there's not institutional participation here. Who do you think's buying up here if there's only 51 million shares traded on the spiders at 3:40 p.m.? It's retail, it's algos. So that's your other red flag. Another red flag, the biggest one to me, where's the bond bulls? TLT, 52-week lows. Fed's gonna save us. Where's the bond bulls front running the Fed? The bond bulls front run the Fed every time, and they have not been able to do that so far. 10-year inching up 1.23% here. 30-year new 52-week highs, 1.65% gain on the day. So we're seeing the same characteristics here. that we saw in August, which, this isn't a surprise. This is what I expected here. I knew that this area would be good support last week. I mentioned that very clearly last weekend, before last weekend, and early last week. We got a nice little bounce off it. That's what should happen. When you hit support, usually you bounce, especially when it's, a good 4 weeks of support and you're going straight into it in an oversold condition. But essentially, there's too many red flags here. Semiconductors, red on the day. That's a red flag as well, just in general. But that's kind of the way I'm looking at it. Now, the next thing, a lot of people I've noticed here today, they've been commenting on the VIX here. So the VIX is up over 5%, with the spiders being green. And usually that is a red flag. Often it is, and I'll be the first to tell you that. However, I think that possibly today, a lot of that has to just do with the CPI number tomorrow, and there's just hedging going on ahead of it. Could be a red flag. Could also just be normal hedging. So this also hedging could be fuel for a possible gap up tomorrow as well, if we have a favorable number. So keep that in mind. But I just want to touch on that. I've seen a lot of people on Twitter talking about the VIX being up with spiders. I just want to make sure I covered that. Now, on to the next thing. So what have I been saying here the last couple of weeks? Dollar will top, and well, if it does top, I haven't really been comfortable calling a top. But if it starts to come in, the markets will like that in the short term. But what else will happen? Silver, which I've been long, took profits on today. That is ramping today. Surge. Copper also green. Take a look at platinum, also long. We took profits on this as well, up almost 3%. Look at that power candle. I thought this would at least pull back. I was expecting a flag at the 50 and 20 moving average there, and this just blew through that. Same thing with silver. I thought we'd stall out around that 20, around that 50 moving average. It just blew through that. So these commodities are moving up. What else is moving up? Oil. Oil's above this red bar high here. We still have about an hour left before the futures close, but if you flip that 87.76 by 5 p.m., that's a confirmed negation of that breakdown bar. So you could have a possible bottom in oil as well. The market, the goldfish brain stock market, is not going to realize this just yet. It's just going to be happy that the dollar's down. But once it realizes that commodities are bottoming, that's going to be a major negative. So definitely something to keep an eye on moving forward. And again, one day doesn't make a trend, but this is kind of the thesis I've laid out here. And so far, it's starting to play out. So we'll have to keep on watch for that moving forward. Anyways, let's get over here. Let's do our sectors here. We already talked about a few, but there's the Qs here. So again, into this down sloping trend line. Trend line's been violated a few times. It's more on the minor side right now, but a little bit more of a psychological level. You do have it kind of coinciding with that daily 20 moving average there. So I guess, this is probably your more important level right now. And then you have that 313 area, 312.75. Somewhere in that area, that's going to be a resistance there. The Qs are notably weaker. Again, another red flag, just like August. Qs weaker than the rest of the market. If Apple was flat today, where would this market be, basically? But those are your levels there. On the triple Qs, the Russell 2000 also just kind of floating higher as well into that 20 moving average. Again, you'll have resistance there at around 390. So we talked about the semis. Nothing really too new to add. This is starting to inch into the green here. Now, just because they floated up in the last 10 minutes doesn't mean that it's all of a sudden not a red flag anymore. The fact that it wasn't surging with the market up is your red flag, even if it finishes green. So that's kind of what I'm referring to there. Resistance up here, the necktie 50, 20 moving average 100. There's your pivot low. So right in that 225 area would be kind of your max move here in the short term. Cloud software, IGV. Actually a little bit on the stronger side as far as tech's concerned. So I'm back above that 20 period, and you got back above these pivots here. So well, at least you're challenging them and holding on there. But so I guess IGV is into a little bit of resistance, but it is holding up a little bit better, all things considered. Let's go over to biotech here, up 0.5%. Nothing really doing there. Nothing wrong with it either. It's actually holding up okay. And this is actually not a terrible little pullback pattern here for XBI. So I wouldn't rule out another little bid here for the biotech sector here in the short term. But again, I think everything will be headed lower eventually. So be aware of that. Dow Transports, again, nice little gap above the 100 moving average, but still a much weaker sector in, in a market that's been lagging. We noted that about crude last week, the fact that crude dumped and the transports didn't bid until afterward. Definitely a red flag. Coming into the 20 moving average, if you get through that, you've got this pivot here at 14,480, so we'll call it 14.5. We talked about interest rates already, so 10-year up and 30-year as well. Yield curves were basically flattish to positive here, but nothing too significant out of the ordinary that I'd be willing to really flip over to them for. Then HYG, another inside candle here. And again, Fed's going to come save us. Where's the HYG? HYG should be surging. Where's HYG? Why is it only up 23 basis points? So another little problem that I have with this little rally. Anyways, XHB, again, another sector that's just, had a gap up and hasn't been able to hold much of the gains. It's basically back to where it opened here and still about to close below that 20 moving average. It's got a nice little bounce there off the lows, but again, Apple doing all the legwork here. Look at the volume here on ITB. As it's kind of stalling in this convergence of moving averages here. I mean, there's no one buying this. This is all computers and retail. VNQ, which has been one of the stronger sectors coming into this red bar, coming into those moving averages. So that may need to stall out, but again, it's holding up pretty well, all things considered, up almost 1% on the day. XLF here, 77 BP gain. It's starting to get a little bit of a bid as everything kind of inches up here in the last 10-15 minutes. Again, I still think this can get up to that 35 handle, which would challenge that red bar high in this breakdown candle as well. So that is where the upside is on the XLF for XBD. You actually hit that level I talked about over the weekend, so 460, 461. We hit it and pulled back. We'll see. Maybe it can come up and challenge this bar here around, we'll say 468 and change, but XBD, nice little strong move there off the lows. Let's take a look at, all right, so we talked about energy a little bit already. So crude, again, got down to that yellow trend line, nice bounce. It's all about, I'll just draw it in for you here. I know it's kind of hard to see because I have that other trend line there. But that's going to be, all right, so let's go to 87.76 is the level. So you want that to be above that, which it is currently by 5 p.m. If not, that still opens the door for a little bit more downside. I think if it gets above this, you could have a pretty significant low in crude here moving forward. But anyways, crude, nice little bounce there. And again, also liking the weak dollar just as much as the markets. XLE up just under 2%, but again, kind of a doji candle here, not really any follow through. XOP and OIH, same kind of deal here, so nothing really too new or out of the ordinary there. Natty up 4.5, so this is what you wanted to see for the bulls here. You need to see a little bit more follow through tomorrow. Nat gas has been resilient all year. It kind of started to bear flag a little bit right above support, which is never a good sign, but it's starting to get a bid here. You want to see follow through tomorrow, and if you can get that, you can get back up there and maybe test that 9 handle again. But a nice little bounce there for nat gas. If it can't, this can get down. I've told you guys many times, it can get down to 7 and 650 very, very quickly. So be careful with it here, especially if you're in the money. I know some of you guys did buy this dip. I did not. Protect this right now. Trail your stop, take half off, do something like that. But make sure you protect this if you did get into that. Anyways, dollar. So we talked about that a little bit. It lost the 20 moving average by the close. So, a little micro technical breakdown, I guess. It's not like it hasn't, breached the 20 moving average before. The big one here is the 50 moving average, and you want to see confirmation below it. So that you never got confirmation here. You just had a little inside candle and it just ripped higher. You want to see close below that 50 and really this trend line, which is basically the same thing at this point. You get confirmation below that, especially a weekly close, then I'll probably say there's a top in the dollar, at least for the near term or near to medium term. Gold, a little bit on the weaker side, considering all commodities here, like the other metals are up nicely, copper, silver, platinum. A lot of that, I think, has to do with the 10-year. The 10-year having a nice outside day here, and the 30-year making a new 52-week high. So that's probably putting a little bit more pressure on gold than the other metals. But it is getting a bounce nonetheless. Let's take a look at GDX. This has been holding up okay. It had a nice little gap up to that 50 moving average. I'm kicking myself for not getting into it when I should have last week. We did play this once, and I missed buying into this dip here. It's just one of those things. Sometimes it gets away from you. But I think on any pullback here, this is a buy. So I like what I'm seeing from GDX, and it is a good leading indicator for gold. So yeah, we'll just leave it at that. And then on to silver, we talked about that already a little bit. Big surge here on the day. Was up almost 6% at one point, but now settling at 5.37. Take a look at SILJ, which we noted. I said, hey, look, the higher low here in silver, in the silver miners, is a good sign for spot silver. So a 2% gain there for SILJ. Just ran into this little pivot here. Again, this can probably be bought on a dip as well. And then platinum, then the rock star here, up almost 3%. This is actually starting to bid up here into the last 10 minutes of the day. But just a major move. Now this will have resistance up at 912, 915 with that 100 moving average. You're just too short-term overbought. But I told you guys, as soon as we got down to this double bottom here, I said there's watch out for a W pattern, and that is starting to take shape now. So a huge move for platinum, and I'm really liking what I'm seeing there. Palladium also with a nice outside day, up over 4%. That doesn't have a ton. This might stall here, but this isn't the worst. Or this isn't great resistance at this point because we've actually made some higher lows here. So I wouldn't necessarily say palladium is going to really pull back there, or at least it doesn't have a major technical reason to. You do have some resistance up here though, but nice day regardless for palladium. Copper, nice day as well, although did not take out Friday's high after you kind of pulled back, but it is going to get above that 20 moving average. And then the COPEX here, a nice follow through day as well. So copper, and really all the commodities having a nice day with the weaker dollar. Bitcoin here, continuing to get over here. There we go. Bitcoin continuing to follow through, so getting a nice bid up 3%. Ether is starting to fade a little bit ahead of the merge, so we'll see if that really matters. Crypto's basically kind of mixed here for the most part, but Bitcoin is getting a bid. Again, levels haven't really changed, 23,000, 24,000. That's kind of your max move before you run into a lot of resistance on the daily time frame. All right, so let's flip back over to the spiders here as we get into the close. We're about 10 minutes out, and yeah, basically just in a holding pattern. Everybody's placed their bets already for the CPI number. I don't really see anything going on here. Again, my kind of bias here is that we gap up. Again, I don't know what the number is going to be. The consensus is 8.1. If it comes in at 8, the algos might freak out and start buying. That could be your catalyst for a gap up. But either way, resistance is up here, 415, 416, and then there's a little bit of level here at that upsloping trend line there. Anyways, guys, going to wrap it up here. We'll see you about the number tomorrow. Come find me on carnivoretrades.com, and I'll talk to you all later.